Welcome to Global Tax Talk. I'm Giorgia Maffini. I'm here in London, joined by Aamer Rafiq, a tax policy and transfer pricing partner with PwC UK. Welcome, Aamer.
Thank you, Giorgia. Nice to be here.
So, Aamer, workforce cross-border mobility. This is becoming increasingly important for many businesses, especially as some skills and labor shortages in some sectors are becoming more acute. And also, we have looked together at some data, and we have seen a much higher share of cross-border workers than we expected. And this is clearly going to have tax implications. Think of the risk of creating a permanent establishment, a PE. Now, the OECD is aware of this, and they are constructing working groups to look at these issues. Aamer, take us through the big picture here a little bit. What does the trend look like, but also what is the OECD doing at the moment?
Yeah, Giorgia, I think there's a lot in that question that you've just asked, but maybe just start with the perspective of how big of an issue is this. And I think it has increasingly become a bigger issue for organizations, for companies. I think COVID really accelerated the rate of change of what was a natural rate of change in terms of workers working remotely or workers working from home, etc. As a result of that, what we've seen is that rate of change has really led to an acceleration of probably about 20 years worth of change in a couple of years. And as a result of that, people have made different lifestyle choices. They've made choices around working remotely, as in working remotely in the same location, or working remotely from a cross-border perspective. The Office of National Statistics in the UK released some data around the extent of this phenomenon, and they released information which basically said that 4 out of 10 people work remotely, and about 28% on a hybrid basis, and about 13% on a full working from home basis. And that is very much echoed by the survey that PwC did on a global workforce, the Hopes and Fears survey, which looks at over 55,000 employees on 40 plus countries, where we got very similar, if not more acute data, which pointed that 56% of people were working remotely to some extent, and 23% of the total population were working on a cross-border remote basis to some extent. So you can see that this is a real issue. This is happening in practice. And I think this has been recognized by a lot of the tax administrations. The tax administrations brought out some helpful legislation when COVID was around to give some temporary relief. I think because this phenomenon has carried on, there's a desire now to want to do more on this, and this has very much fed through to the OECD. The OECD in September 2023 did a soft launch of looking at this phenomenon known as the Global Mobility Project. That soft launch was engaging with various stakeholders, and that led to more work being done. And so in February 2024, they looked at this in more detail and realized that actually they needed to do some work. The 4 areas that they're going to be looking at are residence, permanent establishments, personal income, and pensions. This was subsequently followed up by another meeting in September 2024, when they scoped out the work that was to be done around permanent establishments. And that's the first area that they feel that they really need to focus on. At the same time, they're also looking at transfer pricing, and that work stream will run in parallel with the other work streams in the 4 areas that I've just discussed.
Thank you, Aamer. So looking forward, we, I think, expect some guidance from the OECD, for example, around safe harbors for permanent establishment purposes. What do you see that guidance focusing on, but also tell us a little bit about the timing of that guidance?
Yeah, so I think the guidance, as far as we've been told, is going to be very much looking at commentary and changes to the commentary and the additions to more examples around how the commentary can be interpreted. It's not envisaged that there would be any change to the Model Tax Convention at all. So this is very much clarification through the commentary and examples to elucidate much more what the interpretation should be. In terms of the areas that they're looking at, it's going to be very much PE, permanent establishments. There's going to be 4 key areas that they're looking at in terms of what that means. The first is the concept of working from home. The second is the concept of preparatory and auxiliary, and when you can avail yourself of the exemption on preparatory and auxiliary. The third is the meaning of habitually, when you're looking at the concept of a dependent agent PE and what habitually actually means. And the fourth area is going to be the concept of safe harbors, particularly around teleworking. And we know that there are certain jurisdictions out there already that have this concept on a bilateral basis, but it's around a more holistic view about what that could actually mean. So that's the area. That's, in a sense, the focus around what they want to do. In terms of timing, the first area they're going to pick at is essentially the concept of working from home. And they are working on that at this moment in time. There's expected to be another meeting in February 2025, and with the idea that they would expect to release the updated commentary and examples pretty much thereafter. But it's one where they feel that actually if they can get really good consistency in interpretation and a common interpretation around how that is actually interpreted in the new modern working world, that could bring some immediate and very helpful relief to a lot of companies.
That's super. I mean, so not too far away, really. So what are the actions that you think companies should take at this point in time? But also, we know that the OECD has asked for input from stakeholders to shape this guidance. But also, you know, what should companies do? But also, what do you see companies doing at the moment?
Yeah, and I think there is potentially a lot they can do both in the short term and in the medium term. I think the tax administrations and particularly the OECD Secretariat are very open to engaging with business on this. And so I think there is an opportunity for businesses to engage either directly with tax administrations, the Secretariat, through the industry bodies, whether that's business at OECD, USCIB, or whatever relevant industry body exists. I think there's an opportunity to do that. I think in the most immediate short term, particularly when you're looking at the working from home initiative, then there is an opportunity there to provide some input in terms of what helpful examples could be that the Secretariat and the working party should deal with. There is, I think, an opportunity to input in terms of what would be helpful clarifications to the commentary. But that's a very immediate thing. That needs to be probably done in the next couple of weeks so that this can be very much incorporated or discussed at the meeting the OECD has with the working parties in February 2025. Thereafter, I think there's an openness to discuss and to engage with the businesses by the OECD. And so I think with the other issues that we've discussed about, such as the meaning of habitually, the preparatory auxiliary, there's more opportunity, I think, to engage on all of that. And that is work that is going to carry on beyond 2025. That is work that is going to carry on beyond 2025. And so we can expect more guidance or clarification to come later on. And that's very much, I think, an opportunity for companies to input in on.
Very good. Thank you, Aamer. Thank you for joining us. And thank you also for joining us. Be sure to come back soon for another episode of Global Tax Talk so you can be global tax ready.